G'day folks, welcome back to another update for Bitcoin. Now the prices continue to decline since our last video. We're also going to include some back testing to show some results of the trading strategy. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, March 10, Bitcoin's fundamental outlook appears cautiously optimistic. The recent announcement of the US Crypto Strategic Reserve, which includes Bitcoin, has bolstered institutional interest and market sentiment. However, increased volatility in financial markets, partly due to geopolitical tensions, has tempered some of these gains. Analysts predict that Bitcoin could reach between $180,000 and $200,000 by the end of 2025, driven by its finite supply and rising institutional demand. Nonetheless, the current crypto fear and greed index indicates a state of fear among investors, reflecting prevailing uncertainty in the market. Overall, while Bitcoin's long-term fundamentals remain strong, investors should be prepared for short-term volatility. So we always start off with the long-term trends. On the monthly, you can see that it's still very bullish above the moving averages. However, notice the CCI is broken into that moving average range. So it's weakening there, as shown by those two red candles, currently in the current month as well. On the weekly, it's a bit more prevalent. You can see there the break below the moving averages of both the CCI and the price. And that was a result of the bearish divergence we drew. You can see there lower highs on the CCI versus higher highs on the price. That actually pulled back and broke through that minimum retrace level. And that minimum Fibonacci retrace is measured by a Fibonacci. If you pull it back to that significant low, that 23.38% retrace. Now in this case, it's fallen right, bounced off that 50% level. If it drops much further below that 61%, that's going to be a lot darker days possibly. But at the moment, bearish on the weekly. On the daily, again, also bearish, and that was also this other bearish divergence, and they're independent from each time frame. So the weekly and the daily are independent bearish divergence. But we had higher highs on the price there, lower highs on the CCI, and that pullback hit our target. It bounced a couple of times off that resistance at 108.263, but it's since been falling, and it's actually broken further to the downside. So again, look out. There's no divergence currently on the daily. On the intraday charts, we always look at the intraday. So at the moment, bearish momentum on the daily. We only take short trades, but you can see there that CCI is moving in line with the price. There's no divergence. So we had last divergence, we had a bullish movement back here versus lower lows on the price that broke up, hit our minimum target, and this one went as high as, if I drew a Fibonacci on that, that one went right through the 61% level, stuck its head above it, then it collapsed and fell below again. But it's noticed back, it sort of retraced back to that 61% before making further downside. So using our trading strategy, i.e. when in this case, we look at the daily, we look at the higher time frame, and we're trading on the 1 hour time frame. So when the price breaks below the moving average, and also the CCI breaks below the moving average, on the 1 hour period, we take short trades in this case. And we take short trades only because the daily is below the moving averages of both the CCI and the price. You say that a bearish momentum since around the 27th of January this year. That's where I've started the back testing from on the short side. The top chart here shows the profitability for a stop loss strategy. So each of these were entries and exits on each of these little bars, and that generated, so the baseline is $100,000, so that generated $15,137 if you're trading one Bitcoin contract per trade. This one averaged down, so you can notice how we had a bit of a drawdown on this one because the price went against us. But overall, what it does is it adds contracts to each of these average down. So the first contract will be one contract. When it averages down, when the price breaks higher than 0.005%, we add two more contracts, so we double the previous contract number. So now I've got 3 contracts and so on, and the maximum it enters is 15. So you can see there that period there, we had 15 contracts. That's the maximum it enters. Now, just to be mindful, we do close out the strategy when the daily breaks into that moving average range. So you would have closed it out once there at least, and then re-enter the short trades there, close it out there, and then re-enter again, and so on. At the moment, you're still in short positioning on the 1 hour because the daily's still going short. But compared to the stop loss strategy, if you had a baseline of 100,000, the average down approach has generated 246,166 versus 115,137. So take 100,000 off each of those, 146,171, 15,137. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.